Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll look at the dollar, yields, precious metals, and the commodities and ETFs that I follow. We've got a 7 a.m. Mountain Standard Time Platinum question and answer session tomorrow. So don't forget that if you're a member. And then I'll get in here and give you my financial opinions of all these different sectors going through this. So let's dive in. Let's take a look on what I am seeing in the charts. I still think this is going to go eventually higher. We've got, and what I look for is large buying pressure candlesticks, small selling pressure candlesticks. I'm still seeing that type of format or that type of layout, which works its way higher. So that is what I'm seeing in the dollar. Eventually, I think this will work its way on up, not lower. What does that mean? It means that I think rates are going to go higher at some point when the fear subsides or resides. That's what I'm seeing in this chart, at least with the dollar. So generally speaking, stronger dollar, higher rates, generally speaking. And perhaps, we've got this breakout of a Batman pattern. That's this Batman pattern there. We have the Batman pattern. It came on down. I think we might come back up and eventually roll back over again, eventually, sometime in the future. Now, with the fear out in the markets, that fear is still out there. We were down 5.3% in the 10-year yield. Again, we've got a breakout to the upside. We have a vast move lower, very quick move lower, with the fear in the markets of this banking liquidity, contagion, whatever it is. We're still on support right now. And I'm not sure which way this is going to go. It highly depends if that fear stays in the market or if that fear resides. I think we're going higher in the 10-year yield. So I think the market structurally wants to go higher with yields and higher in the dollar. But temporarily in the short term, the fear in the market is driving rates lower, and same with the dollar. Now, with those rates and with that dollar lower, gold loves that type of scenario. It loves it. It also got a little bit of money printing too attached with it, which gold also loves. So we look at the 30-year yield. It is lower, and we're still above this trend line. Breakout, retest, and then generally it moves on up. The short end of the curve, like the 10-year and shorter, are much more volatile to short-term market events. And we're seeing the curve uninvert very quickly. Bond prices a little bit higher today, but I'm not too sure that this wants to break to the upside. We've got resistance here and a bunch of selling pressure candlesticks, and nothing really telling me that we're just going to launch higher in bonds. So looking at all this, I'm not all that convinced that rates are going to continue lower for a long period of time and that this is just going to break and move on higher. Well, anything can happen in the short term. That's what I'm going to say. And if the fear drives it, obviously it can do that if it wants to. But by looking at the candlestick patterns, by looking at how things are broken out, doing retests, to me, it looks like higher yields, lower bond prices, whenever this fear subsides in the future. The TYX-TNX ratio is telling us in the short term, we were pulling lower here, which the curve was inverting. When the curve inverts, precious metals don't like that outside of platinum. This guy here is the fear in the market. So that's the fear in the market. That is the liquidity problem, bank runs, all that stuff. When this goes up from a low point to a high point, gold does crazy things when it goes back up. So gold does very well under those conditions, right what I'm showing you here. So what that means is that the curve is normalizing or uninverting. And right now, looking at it from a long-term perspective, it looks like that is something that could potentially set up that way. But looking at a lot of these other charts, I'm not sure if that fear is going to stay in the market or if it's going to reside and head back lower. We do have some sort of resistance kind of through this area here. that we're coming up to where we've got a lot of turning points. So we'll see what happens. I don't think, well, it's tough to know what the short term is going to do. And I don't know what the short term is going to do necessarily. I'll say it that way. But we have things that are going against each other. Before this, we were inverting. After this contagion fear, we are normalizing. And that normalization is what's driving the price of gold higher and silver. So we look at the CRB index. The CRB index is still low because we've got oil and the fear of this contagion, the fear of a recession and slowdown and all that stuff is getting baked into the cake for oil. It seems like oil is just going to move opposite of gold in these types of crisis types moves. So CRB is down, almost doing like this retest move. But again, we'll see what happens and if the fear resists, or so if the fear remains in the markets. Commodity to S&P 500 just, I mean, we're up a little bit, about 1%. We've broken the downtrend channel and we're just kind of chilling out right now. Gold rocketing higher, up almost $60 an ounce, breaking out of at least this trend pattern if you hit off the tops of these guys and kind of cut through this one. Is this going to be sustainable where we continue to head on higher? It just depends on what the fear is in the market. This here is the fear in the market and the curve that is normalizing. Silver also following suit, big moves higher, up 3.5%. And then the inflation metal, platinum, which correlates very heavily with crude oil, not moving higher because this is an inflation metal. It's not a fear metal. So gold and silver doing well. Platinum is lagging behind. This is the one that I would be looking at, given the ratios. XAU to gold ratio, the gold and silver mining companies are heading a little bit higher today. I'm just not, this doesn't seem that convincing like this is bottoming. It just seems like it's moving sideways, waiting for fear to subside. At least that's my take on it. So we're not breaking out of this. We're not moving higher in terms of XAU to gold ratio yet, in terms of this big long-term trend that's going to break out. I don't see large expansion moves of gold and silver companies in relationship to gold itself. This isn't convincing over here, at least not yet to me. So I don't know if gold and silver and the mining companies, in terms of the mining companies, are just going to rip it here. Obviously, they are short term, but we're getting these little wicks at the top. We'll see what happens. But it doesn't feel to me like this is going to be the big old move that we're going to move on higher for this gold and silver mining companies. But that's just a feeling. Doesn't mean anything. SILJ also up a lot. But we also have this big bearish engulfing right before it. We kind of came down, we popped up. You know, it highly depends on that fear in the market. The trend was lower. And I think that trend is still intact, and we're just having a short-term relief to the upside is what my gut feeling is. And that people are positioning for the fear in the market. And maybe that is, you know, maybe there's some, I'll call it, reasoning behind that fear, and maybe we move on up for a while. That is possible, but I'm still looking at the underlying structural conditions before this fear happened, and the trend was lower in a lot of these. Crude oil, the trend obviously changed in the opposite direction for crude oil. It's heading lower with the fear in the market. It's still heading lower, even still. We had this double bottom. Maybe it's a triple bottom now, where we could potentially head higher. So maybe it's a triple bottom. This did look really good. This looked like it was forming a Livermore accumulation cylinder. 1, 2, 3, 4, 5, and then it blew out. Short term, anything can happen. And now we're putting in that hump there. And maybe that is still the accumulation cylinder that we're doing with the triple bottom. We usually get a hump before a move. So we'll see if this plays out next week and we get a higher oil price. And we'll have to wait and see. Natural gas also selling off. Short term, which is the least reliable, guys. I don't really like looking at the short term. We're just moving sideways. We've got buying pressure, and then we're just kind of slowly leaking off here in the short term. Backing out to the weeklies still looks really good. Two big, strong up weeks and two smaller weeks. So I do think that we're bottoming here before potential move higher. It's just going to take some time, I think. XOP, yeah, you know me. It is down today, but I still see this as strength. We got this big bullish engulfing, and then the bloody nose today. That is generally a continuation pattern to the upside. I am a buyer down here. Yes, I'm aggressive. Yes, I go early. Why? Because I think the deficits out in the future in the second half of 23 and 24 and 25 and all those will be seen, will be felt at some point in the future. So you have to buy early enough where people are afraid and fearful to get you a good entry point. This is the entry point I've been waiting for. So I'm taking advantage of it. I'll just put it that way. Short term, just to kind of look at the short term, this is what it looks like. We sold off here. We did a bounce. This is a bullish engulfing there. We came back up, and we're just kind of moving sideways there in the short term. Waiting for some buying pressure to come on in. Obviously, in the short term, guys, anything can happen. This isn't as reliable as, say, longer term patterns. So I still think there's a possibility that we could even end up at 103 down here, where we come on back. What that would do, if we look at it on a logarithmic, is an inverted head and shoulders that would basically complete this like that. And then we get a big old move to the upside of the inverted head and shoulders. It's a massive inverted head and shoulders pattern. We've got maybe 5 to 10% more downside potential in XOP if it wants to hit the bottom of this rail there at about 102 from 117. OIH also selling off a little bit today, 3% sell-off, which it's a pretty big sell-off. But we do have this bullish piercing, and this isn't a reversal candlestick or anything. So I think we're probably going to move sideways to slightly higher out of this bottom. Well, hopefully it's a bottom pattern. If the fear continues in the market, if we keep seeing this gigantic sell-off in interest rates and precious metals continue to go higher, I think oil will continue to sell off if the fear persists in the market. But this is an attempt to try to put in a bottom. It's not a huge, strong attempt, and we may have to go sideways longer to consolidate this gigantic sell-off in oil or energy services. And I hope that's the case. It gives you a longer buying opportunity if it stays down for a little while. The Sprott Physical Uranium Trust getting some buying pressure today, but guys, this still looks kind of weak, like it wants to probably roll over or go sideways at best. This isn't a strong buying pressure candlestick or really any reversal candlestick yet. URNM also getting that same type of Sprott Physical Uranium Trust action. Two small candlesticks next to a large down day. That's not confidence inspiring yet. So I think we could go sideways to slightly lower still in this chart with this large selling pressure here. You can see all the red candlesticks, and these are just rolling over as we come down, and this could roll over as well. Looking at TAN. TAN also starting to sell off a little bit. Little wick at the bottom. Is the support line going to hold or not? Are we going to get a little bit of a panic washout sale in TAN? It seems like the panic is strong these days, and maybe we get a washout before this move higher. So that is very well possible, and we also saw that type of move when it fell. So it fell all the way down here, and then it went into a consolidation. The way it usually comes up is the same way it may fall. So that is a possibility, and maybe $50 is in the cards here. If people are looking like, oh, I want to buy this, and they bought back here, I would say look to buy again down here. That's how I would play it. COPX slightly higher today, kind of bucking the trend there, but again, the momentum's still down. I don't see any huge reversal candlesticks yet. This wasn't any follow through from the day before. So that fear in the market still persists, and we got some work cut out ahead of us in a lot of these different sectors. Here's lithium, down day today, down 1.5%, just a continuation. I do think this could still move sideways or slightly higher. REMX also slightly, we call that the bloody nose. It's a little bit high on this candlestick. This is a bullish piercing. So I think we're either going to go like that or we're going to go higher for REMX. And make sure, I mean, a lot of this depends on the fear in the market. If the fear still is there, we could still go a little bit lower. But I think that fear will subside at some point. I don't know. I think this is going to last, a few weeks, maybe a month or something like that. And I think it'll blow over. At least that's what I'm hoping for. But maybe there's things that it exposes that's deeper than what we're seeing today. The SPX, this is a bloody nose where it's a continuation pattern to the upside. We've done a retest on this trend line, and I think we could potentially head higher depending on what the overall market and the fear in the market is. Same with the NASDAQ bloody nose. That's generally a move higher. EEM, bloody nose. That's generally a move higher, a continuation pattern. It's a small down red candlestick next to a tall bodied guy. That's why I call it a bloody nose. And I still think it can go and move on higher. XHB, also small down day. It's not a reversal candlestick. I do think it can move higher with time. MOO also getting a small little down candlestick sideways to higher is what I'm seeing. And again, guys, we very well could come up here and roll back over. That is in the cards. So it doesn't mean I'm talking very short term in these short term videos that I'm doing here. It's really daily movements for the short term. Big long term, I'm a huge bull in all these commodities. I just think it takes the right market conditions. We need to get the fear out of the market, and they're going to print money. This Ponzi scheme needs more liquidity. It needs more money, and it's either growing or dying, depending on how you look at it. Ponzi's can't exist when it's dying. It'll just collapse on itself. So it's going to need continual growth of the money supply in order to survive. Copper, it's still holding steady when we're still above big support. Lumber, moving higher today. The housing market looks very strong. I think housing can do incredible things, and lumber's telling us that it also can do incredible things, which is a sign saying, yeah, we are moving higher. Iron ore, slightly lower today. Not much really to talk about there. It's just kind of moving sideways. Nickel, down a little bit, down 2%. Let's see if this thing can get it to load. Just slightly lower, and we're coming back to this support level, kind of right where we're at. Aluminum, looks like it's trying to find some footing in the short term here, just slightly up today. So we basically have an inverted head and shoulders, and it kind of just fell apart with all that fear in the markets. Baltic Dry Index slightly lower. This guy's been on fire, but it is slowing down a little bit, and maybe we do a return move before heading higher. Newcastle Coal down a little bit. Again, I think we're going to get down here, give it a little bit more time. Let the fear bring it down a little bit more and give you a little bit better buying opportunity there. And then we've got Ethereum rocketing higher today, looking fantastic. Pretty good close. It's getting up in this resistance area. You can also have, little megaphone pattern there. And then Bitcoin's also got that megaphone pattern that it's breaking out of to the upside. We could see a big move out of Bitcoin and Ethereum. These are measurements of liquidity in the system. So maybe we got more money coming in the system, and that's what it's saying we've got. So more money's coming into these speculative assets. So that's what we've got for today, guys. Still lots of fear in the market. We can see it in the 10-year yield, the normalization of the curve. Gold loves that when you've got a weaker dollar, a normalization of the yield curve. Gold's rocketing on up. It's breaking. We've talked about that last platinum question and answer session. We were talking about physical gold and how that could do that. Oil seems going completely opposite of the fear trade, which is selling off. I think that's going to be the best buying opportunity here. Even now, I would say is a really good spot to be looking. Energy service companies, I think, I for some reason I'm kind of looking at the exploration production companies more than the energy service companies. But the energy service companies, they'll just be lagged behind the exploration production companies. And eventually these will, I think, move on higher when the structural when the fear resides and the structural underlying market conditions come more into favor, I just think this is going to be one heck of a buying opportunity here for energy in general. Looking at this from a 5-year time frame, we're going to run into shortages. I would say second half of 2023, we're going to start running deficits. It's going to start eating through inventories. People are going to notice it. If, and I don't know if they will, if America starts to come in here and buy up all those barrels to fill up the reserves, which I highly doubt they will, they won't fill it back up. That would provide a bunch of demand and then put a floor underneath the price and then hold the price higher. But I don't know if they're going to do that. We'll see what happens. But right now, that's what I've got on the markets. Give me a thumb up for the content. Subscribe to the channel if you haven't. Take a look at the website. Check out the website. We've got a platinum question and answer session coming up tomorrow at 7 a.m. And we'll catch you there. This is Finding Value. Catch you later.